Meme stocks, what are they?
Yeah,
Why should
sure.
it matter, or why shouldn't it matter? Let's talk about that. Now, with a good market or a hot market, always comes excesses. And when we talk about excesses, why don't we talk about meme stocks? Meme stocks, what are they?
Yeah,
Why should
sure.
it matter, or why shouldn't it matter? Let's talk about that.
Yeah, I think, I mean, certainly we would not, as institutional investors or custodians of people's money,
You mean people who are
professionals,
sane?
right? Yeah. We, I think you've got to make a distinction between sort of meme stocks and buying, real companies with real earnings in client portfolios that you want to hold for the long term. But meme stocks are really stocks that a collection of retail investors and that maybe are on certain blogs will sort of all identify and typically they target stocks that have large short positions. So if you have a stock, as we've seen AMC recently, this is basically a company that runs theaters, so movie theaters, and obviously there hasn't been much business there. So institutional investors and hedge funds have shorted these stocks, thinking that there may be challenge, there may be restructuring,
To
and
say
what
the
you've
least.
seen, yeah, and what you've seen is retail investors um, sort of collectively going after these stocks and buying them indiscriminately to drive the price up, so that institutional investors have to cover their short positions, so essentially buy back in, which only further exasperates the move in the share price. And so you're seeing these really big outsized movements in stocks that really are not necessarily investable. So um, that is in a kind of in a quick nutshell what a meme stock is. And a meme, as we all know, is sort of like a cartoon with a saying. And so they've, with maybe sort of something that's posted on Instagram or on a blog, people will just simply buy these stocks based on a one-page cartoon or an idea, and that's why they're called meme stocks. But the fundamentals behind them aren't strong, and they're being sort of you know, hedge funds are sort of being attacked on the short position, forcing them to buy back in.
Yeah, because
And
when you look at it, the hedge funds, and if you look at them, I just off the top of my head, take say something like GameStop. I can't for the life of me think of why you that's a viable business going forward. I have a teenage son, and there's no chance he's going to the store to buy a game. That business is like 20 years ago. That's like Blockbuster Videos 20 years ago. And Netflix came and took it over. So unless something drastically changed in that sector, that's not about to change. But you've got the situation right now where there's big short positions, and shorts do have to buy back their positions. And if there's enough volume to come in, your point is well taken that these are companies that probably are not viable businesses. I don't want to go too far on a limb, but I'm 99% sure that it's not going to end well for them. But in the meantime, there are some people making some trades, but I think they really have to understand that what they're doing there is speculating
yeah,
rather than investing. And I think that's sometimes where the confusion ends up, that speculating is perfectly valid. I'm not going to say don't do it. I'm not your mother. But don't confuse that with investing, and just assume that at the end of the day, many of these things are probably going to go to zero.
yeah, and I think it's important. Like if you don't have a structure in which you're making a rational investment decision, you're just buying it because somebody's told you it's a good idea, and it doesn't necessarily mean have to be a meme stock, but you know then you don't really have a rational reason or know when to sell it.
Yeah.
So if you bought it, through a tip or speculating, and it goes up a lot. When do you sell it? And that's, that's the conversation I often have with friends that are not in the industry, where they may be buying these or saying, well, where do I get out? And I said, well, what was your process for investing? What was your rationale? How did you arrive at this? And they say, well, I didn't really have one. Well, then it becomes hard to know when to get out if you're just speculating. So, yeah, and in fact, the SEC in the U.S. just recently announced that they're going to start to look at some of the trading here to make sure that there's not manipulation of stocks. So the SEC's job is really to make sure that the markets operate in a fair and an orderly manner, and that nobody can come in and sort of manipulate share prices, and make sure that every investor that enters the market is treated fairly. And so so they're sort of looking at this, but there certainly is sort of this David and Goliath
Yeah.
type approach. It's the little guy against the big guy, and sort of everybody's cheering for the the small retail investor who's benefiting. But this is not what you want to be doing with your retirement funds. This is not what you want to be doing with your long-term safe money by any measure.
No, no. And once again, whenever we talk about something like that, I think caveat emptor is so important. Hey, thanks for taking the time. Why don't we leave it there? Great insight, as usual. Come back and join me in a few months. I'd really like to see you again. Kevin
Sure.
Vandermeer, thank you.
Thank you.